Good afternoon, everyone. My name is Susan Ryan, and I am with eXp Realty. And today I wanted to have a real conversation about, what's happening in the market and why it's so important to partner with a lender early on in this whole process. So that's why I asked my trusted friend and expert, senior loan officer with Guild Mortgage, Elise Bare, to join me. And Elise has been helping people navigate lending for over 30 years, so she's absolutely seen a thing or two. I think she started when she was about 2, maybe. And so she's here to help us separate fact from fiction. So thank you so much, Elise, for joining me today. And I'm really looking forward to, tackling some of the things that are on people's minds for sure. All right. So I thought we would talk about, basically 3 things: the truths about what's happening in the market, the myths and misperceptions about what's holding buyers back, and then simple steps and solutions to creating that path forward. All right. So before we dive in, I just thought I'd spend a minute just kind of going through what's happening in the market. So pending sales in August jumped 30.2% year over year, which tells us that demand is strong and buyers are still out there making moves. Closed sales are down about 10%, but that's largely because of the limited inventory that we continue to see in southeastern Massachusetts area. It still varies town to town, but that's just a generalization for the area. And then the median sales price for single homes is around $551,800, which is up 2.2 compared to last year. And year-to-date median price is up 3.7% to about $539,000. Inventory is still tight, down more than 12% year over year, and the month of supply has fallen to 2.1, keeping us firmly in a seller's market. Days on market have stretched a bit. Things are staying on the market a little bit longer. Just extended time period is just giving buyers a little bit more breathing room as opposed to, when things are moving so much faster. So one of the things, Elise, why do you think it's so important to connect with a lender early on? And what is the role that you play, like when you sit down with a client or someone who's looking to buy a home?
I do always say it is interesting because obviously people will hop on, websites and they seem to contact the realtor first. But then what happens is they don't know any of the numbers once they're out there looking. And how do you make an offer on something if you don't know how much you need for a down payment, what your payment's going to look like, how does it compare to what your, current monthly housing expenses are, and to be ready. So it does seem like people, jump one way first, but we always say get pre-approved first because there's so many pieces to it. So what we do is we take the application and we gather their information enough that we can pull a credit, and very often we pull a soft credit, so it doesn't even create an inquiry. Another benefit to the soft credit is that way we're not continually pulling the credit because, as you mentioned, the market's a little tight. If somebody doesn't find a home right away, then we don't want to have to keep pulling their credit every 4 months. Let's keep repulling it. So we pull a soft credit, there's no inquiry, but it gives us all the same data as the hard credit, and it lets us see everything in terms of their ratio, their credit score, and put the whole file together. And there's so many programs that are out there. So again, you don't know what your buying power is until you get pre-approved first. So one of the things we see sometimes, and another good reason to get pre-approved before you start going out house shopping, sometimes the credit score isn't where it needs to be, or sometimes we can suggest an easy fix of something that you might need to do to get in a better place. So just as an example, we can do credit scores all the way down to 580 under certain loan programs, but you might pay a higher interest rate for that. Now, I might pull your credit and say, if you are able to just pay down on this credit card, and do one other thing, in the next 30 to 60 days, you're going to see your credit score go up by, potentially 40 to 50 points, and that could make this much of a difference in your interest rate. So don't go out looking just yet and get yourself locked into something, because then you're going to be tied to that credit score where there might be an easy fix. So I think, doing the prep work ahead of time is so key, and also makes everybody feel so much more comfortable. And when someone like you, Susan, is taking people out to see homes, they're going to be more comfortable making an offer, saying, I know I can afford that payment, I know the interest rate is where I'm comfortable, and I know that I can handle that and manage that. Plus, in the meantime, maybe they've paid off some debt that makes it even more comfortable for them because they don't have those other obligations.
That's wonderful. I didn't even know that was part of what you do in terms of really being able to get that, identifying which accounts to pay down that will help your ratios. Because to your point, the thousands that you're spending or saving over time from getting that lower rate on your home, that's incredible insight. That's wonderful. And I think you're spot on. I always I don't know if you've ever seen Say Yes to the Dress or whatever. They always say like not to show people, the $20,000 gown if they can only afford, 2,000 or whatever the case may
Right.
be. But it's the same thing with houses. You don't want to be showing people more than what they can
What
afford,
they're
right?
comfortable with,
Yeah.
And of course, it's hard for people to know. And you can't look at a house and say, this is what my payment's going to be, because you don't know. And then sometimes, obviously, we take into account, what the taxes are and the homeowner's insurance and give them the whole payment, all together so that they're looking at the whole picture. And of course, we can always, we don't know exactly, but you can get a sense of also take into account you're going to have utility bills. Now, someone who's renting is currently paying utility bills already, but it's different, on a 1,500 square foot house versus a 2,500 square foot house. And you want to take those things into account as well and see how people are managing their money.
And things like, lawn care and, just other regular household expenses. And, that's another thing. When I work with my clients, I always want to focus on, lifestyle. Like you don't want to be house poor. So you're,
No.
sitting at home having to have peanut butter and jelly every night for dinner. You want to be able to like,
Yeah, I always use ramen noodles.
yeah, exactly. Back to college day.
Back to
Right?
college days.
So, but that is so true. And being house poor is, to be perfectly honest, I was in that situation, and it's not a good time. Absolutely not a good time.
Right. It's stressful because it's the roof over your head. It's the most important. It's your biggest expense you're ever going to make.
Yeah.
So you want to make it with a team of people that are going to help you do the right thing, but also looking at all your numbers and making sure you're taking everything into account and not overextending.
And one of the wonderful things, one of the gentlemen that I actually sent you, like he realized that his credit score wasn't where it needed to be, and so that's additional counseling that you can help them with, and to be like, okay, let's look at this. And you alluded to this already, like let's look at this 3, 6, 9 months, and we'll work on it, and so then they can get into the home that
Right. There are certain things with the credit that the score improvement is a little faster than other things. It just depends what's out there. Sometimes like paying down credit card debt only kind of takes like 30 days, where sometimes maybe if there was a late payment on something in the past, it might take a couple more months, but we can see that and advise accordingly so that we're setting a realistic expectation for your time frame.
That's wonderful. And the other thing that I hear people, I was in a restaurant, and someone mentioned to me, she's like, oh, I've been meaning to reach out to you. We're just not ready. We're still saving money. And then I said, well, have you spoken to a lender yet? Because they can talk to you about how much you really need down. What do you really need to get started?
I just had somebody call me this week, and they're going to be what I call a second-time home buyer. So they thought if you're going to buy, they thought that you could get away with less money down when you're a first-time home buyer, but as a second-time home buyer, you had to put 20% down. And until somebody asks you that question, you don't know that that's what they're thinking, but that's not correct. You can, when you're a second-time home buyer, you can get away with as little as 3.5% down. You can do 5% down. It depends on the house and the program, but you don't have to have 20% down on any of the loan programs for primary residence. There's definitely different criteria when people are purchasing as second homes or investment property, but for primary residences, you never have to only put 20% down.
And that's incredible. And, also being able to factor in things like weighing the pros and cons of PMI and, all of those things, even if you have to start with a PMI payment, which is, your mortgage insurance, you can get rid of that.
Yeah, and if you're comfortable with it, because I always say, like, and it's going to sound weird because obviously taxes and insurance can change, but let's just pretend we say to you, your monthly mortgage payment is going to be $3,500. That's taxes, insurance, PMI, everything that we're estimating, and you're comfortable with that. In a sense, that's going to be your highest payment that you're ever going to be on that house, because down the road, the goal would be to refinance equity builds in the house, or you fix the house up, you can remove the PMI. Hopefully, if you're refinancing, it's to lower the interest rate. So if you're comfortable with the $3,500, the goal would be that, or the expectation would be that the payment could only get lower. The only thing that can change that a little bit is obviously taxes and insurance can go up a little bit. So each year, until you have that opportunity, you're going to be in that range, but you're not going to jump from $3,500 to $5,000 or anything like that. It's not going to be that drastic. But the goal would be, like, if you're comfortable with that, then it can only get better. from there. So even if you start a loan that has private mortgage insurance, which is something that's needed anytime you put less than 20% down, the goal would be to remove it when the opportunity arises, whether it's through improving the home or equity builds in the area over time, or you have a refinance opportunity and you can remove it.
That's great. That's wonderful. So when we were at lunch the other day, you were talking about some of the really unique programs that, and again, unless you talk to your lender or a lender, like with Guild, you don't know what the programs are and opportunities are out there. So you were mentioning some pretty cool.
Yeah, like we offer the MAP housing program as an example for first-time home buyers. They have a lot of programs within their program, but just to kind of give like a quick one, based off of income in the counties that people are purchasing, a first-time home buyer can obtain $25,000 towards down payment and or closing costs. Yeah, it's a lot. They do pay it back. They pay it back at a 3% interest rate, so it's pretty cheap over 15 years. But it's a great way to maybe not, dip into your entire savings, or if you don't have a good savings, but between your down payment and closing costs, an extra $25,000 is extremely helpful.
Huge. That is incredible.
So we use that a lot. There are programs out there like the USDA, which is a no money down. Veterans don't have to put money down for the VA loan. There's as little as 3.5% down on the FHA program. We also offer a 100% FHA program where you take like a first and a second combination. There's a lot of things out there, and you just have to, I could go on and on with the detail, but that's when sometimes people will call us and they'll say, I want to take out the FHA loan. And I'm like, okay, but how do you know that? Like, did you already talk to somebody, or do you think, like, maybe they think that that's the only program that's out there, and then that gives us the opportunity to say that's a great program, but let's also talk about some of the other things that you may or may not that you may qualify for, and see if there's other opportunities that you might like better, and see what works.
That's amazing. That is fantastic. So the core message is reach out to your lender soon, and then whether you're ready to buy or you're looking to buy in a year or 6 months or whatever it is, what I always grateful for is that you're there to kind of help guide that for the long run, right? Instead of like having to do it super quick and not have that opportunity. If you go find a home like we talked about in the beginning and you haven't spoken to a lender, that puts you in a position where you have to, scramble to get things all together. And it's much better when you can have like a much longer runway to actually, get ready.
The thing is too, is we know, in fairness and honesty, people tend to look at houses on the weekend if that's when their schedule allows. Well, sometimes we're all available, but sometimes we're not.
Yeah.
But if you take the time to get, pre-approved during the week, we can gather your paperwork from you. We can gather, your pay stubs, your bank statements, whatever. We can see what you really have. So then we're putting together a solid file. I just had a gentleman tell me that where he works, they limited the overtime now. So he only gave me his base pay on the phone, but they've limited it. But still, I can use it because we're sitting here in the month of October, and he has received it, and he received it last year. So the income that he was giving me verbally versus what the income that I was able to use for qualifying once he gave me his pay stubs and his W-2s were so far apart. He had so much more buying power. Now, even maybe he doesn't want to go higher, obviously, if his overtime isn't as available. But it was a whole different loan program. It was a whole different way of looking at the whole file. It impacts the PMI. It impacted everything about the file being what we could use versus, what he was stating. So when you have the time to look at it. So I guess the thing is not that there's anything wrong with getting pre-approved on a Saturday or Sunday, but sometimes it's a little bit more on the fly. People don't have access to their paperwork, or we don't have the availability to look at it clearly right away, and you can have a delay. Whereas when you have the time, obviously we have to get pre-approved, but it's easier when it's done, when we can gather all of the information and make sure we're not overlooking something and get tripped up. Because, like as an example too, the program I mentioned earlier, Mass Housing, it has an income component, so we have to make sure we're using the right income. You can't even be over income and then we're giving you bad information that doesn't work. So sometimes when people wait till the last minute, then everybody's rushing, and I guess that's when you can say mistakes get made because you don't have all the facts. You're just going with some verbal stuff, and that's not really as solid as really putting together a very complete file that the client can feel comfortable making an offer. You as their realtor can feel very confident placing the offer for them, and we all know that it's solid and good to go.
Yep, absolutely. And that's so important too, is always be open and honest with your lender, because they will find all the information one way or
I have had people tell me that. They're like, I don't know if I'm supposed to tell you. I'm like, no, you can tell me.
Yes, you definitely can tell me, please. So this has been so helpful. And what do you think would be, your top, say, 3 tips for someone who's getting ready to think about buying a home?
Right. Well, like we've just talked about, obviously get pre-approved first, make sure everything is in order. Sometimes maybe sit down and do your own budget too, because one of the things I always ask clients is, I'm going to put together these numbers, but where are you comfortable with for the payment? Like, what if I say to somebody, your payment's going to be $3,500, but you have in your head you only want to be at $2,500? Then we're not even, then like, let's lower it and we'll be in the right, price point, or we'll see if we can do more money down or something like that. So I'd say review your own finances and see where you're at. Make sure your credit's in good standing as much as they can, pay off debt and, do their own things to be ready. And it is good to get like a sense of the market and know where they want to be and what they want for a home and what they're looking for, so that everybody has a realistic expectation.
I think that's wonderful. And again, it's spot on, because especially in this market where the inventory is low, you might have that opportunity to flex a little bit one way, or another, and just knowing what your range is and what you're really, where you want to stay. Again, go back to lifestyle, from a lifestyle perspective, is empowering, right?
Right.
Wonderful. Anything else that you'd like to talk about or share?
I think I'll just mention one thing. I know that we don't have that crystal ball as to where interest rates are going to go.
Right.
The hope as we sit here today, if you're following the economic news, is that the Fed is talking about bringing the rates down. When the Fed brings the discount rate down, that's actually just the rates that the banks borrow at. It doesn't always, like if you hear that the Fed discount rate by, a 0.25%, it does not mean that mortgage rates came down by 0.25%, but it means we're trending in the right way. And a lot of times it's also what the Fed says and not always the movement of what they're going to do. Sometimes it's just the expectation, but they definitely are talking about the rates hopefully coming down, hopefully a little bit more by the end of this year and into 2026, beginning of 2027. So it could be positive. I think that would help move the market. Obviously, you and I talked about when we were at lunch, obviously some people that are sitting at, some very low interest rates, it's hard. You might have outgrown your home, but you don't want to leave that interest rate that you have, and that makes sense. But if the rates become a little bit more realistic, right now we are seeing them in the low 6s, high 5s. So if we can come down a little bit lower, I think people will feel more comfortable with that, and it'll be a more comfortable payment for everybody.
And then even that's better, than it has been.
We have been in the high 6s and the mid 7s. So
and that's very true about the, even though you're sitting on a 2 whatever interest rate, you're paying for maintenance of the home, and like if it's a bigger home that you want than you want to be in. And this was my situation. I had 2 something%, but it was a 4-bedroom home, which I didn't need, and the expense of maintaining that home far exceeded any rate differential.
Right.
And
then on the flip side, I've had some of my prior clients calling, and they bought it when it was just the 2 of them, and now they're a family of 4, and there's not enough room.
Yeah.
People calling, we need another bathroom, we need another bedroom, but it's hard. But now you're going to buy something more expensive, and if you take on a higher interest rate, so it really does impact it, although they'll obviously make a good amount of money off the sale of their home, and they'll put it into the next home. But still, it's more comfortable going from, say, like 3 to 5.5 than it is from 3 to 7,
Correct. 100%.
It just makes total sense.
That's awesome. Well, Elise, thank you so much. This has been wonderful. I appreciate you taking the time and chatting with me, and I look forward to sharing this information out with all of our clients.
That's great. Thank you.
All right.
Have a good one.
Thank you.
Bye-bye.
Bye-bye.